Great year of 2026. Is Prateek Maheshwari, co-founder of PhysicsWallah, going to have a great year, and is the company going to have a great year? That's the next conversation we're having. Prateek, great to speak with you again, and thank you so much for your time with us here at NDTV Profit. So I think your company had what many would call a dream debut. And I remember our conversation on the day that your stock listed, and you said we couldn't even believe that this was maybe our company which has seen this kind of a zoom. Since then, so much more happening, some volatility, some initiating notes. First of all, key lessons, and then we'll come to the outlook for 2026.
So amazing year. Last year was for the company a great outcome in terms of a marquee listing. That makes us the largest education company at this point of time in the country, and we are seeing solid growth in future both in our online learning and offline mode of learning. So continue to grow faster as both top line and bottom line in upcoming years.
Started spending some of those IPO proceeds, one acquisition, more centers being opened up. Just give us a roadmap of this. What are the next few months going to look like? Is it going to be a lot of capital expenditure?
Historically also we have been very frugal in terms of deploying the capital. Online doesn't need capital for further expansion. Any online category gets break even in very first year of its operation and start generating cash from second year of operation. Online margins are very high. We as at a category level, we have 45 to 60% margins in our online business. We don't need capital to expand in online, but there will be some consolidation of a small players in our online mode. For example, the way we have done Xylem, the way we have done Utkarsh, we will continue to grow as a house of brands in online. So there will be some announcement in upcoming quarters in our online mode of learning. Offline, we are number 5th player at this point of time. And the number 1 to 4 player together are doing more than $2 billion of revenue, and we are doing only $150 million of revenue. So there is a huge headroom to expand in offline, and we will be opening 200 more centers in next 3 years. 75 centers will be opened in FY27. And already we have signed those leases and continue to grow stronger in offline mode of learning. Next year will become profitable, PAT level profitable at a group level, at a company level. And our offline mode of learning will also become EBITDA profitable next year.
No, so a lot of things that you've said together, Prateek. So let me break into them one by one. One, you talked about your your online margins between 45 to 60%, if I heard you correctly. Right? What are your offline margins? Because that's where the new growth seems to be coming from.
So offline margins are anywhere between 13 to 18% at a steady state, but offline ARPUs are 10 times more than online ARPUs. So it has more potential to increase our overall blended ARPU, the average revenue per user. But offline margin are 13 to 18%, in that is the industry standard.
New companies and new kinds of companies, there are new ways of describing them. Average revenue per user is usually something you have in the telecom industry. Having said that, what is your ARPU right now, and where do you expect it to go?
So this year, the ARPU will be close to 4,000 rupees for the entire year of operations, both blended online and offline learners put together. And we don't want to increase it very rapidly. We will do only inflation adjustment, the cost of living adjustments, because the companies stand for access. The companies stand for availability of a good quality education to every pin code of India.
And any reason why the average revenue per user is, or I suppose the average spend per student, if I were to put it in a different way, is higher than in offline, in physical classes rather than in online classes?
See, online we operate on a mega classrooms where thousands of learners study together in one live environment. So cost of operations, cost of delivery is very minuscule there. Vis-a-vis offline, you have to do capex, you have to pay rentals, you have to pay, and the student-teacher ratio cannot go in thousands. Like, our online student-teacher ratio is one teacher is teaching 10,000 kids, 500 teachers put together teaching 50 lakh students. But offline, there are 2,500 students teaching close to 3 lakh 30,000 kids. So the student teacher ratio cannot exponentially rise in offline mode of learning, and there is a capex and the rental requirement as well.
So, when you're talking about that, Prateek, good morning, Hiral on this side. What's the center rollout strategy going to look like? Because you've said, 75 plus new centers in FY26. So, what is the potential nascent margin risks that were flagged by analysts earlier? How are you going to deal with that? And two, when you talk about this Vidyapeeth versus Pathshala, how will that capital allocation actually differ in 26 between Vidyapeeth? Because that is going to be high investments. And you have tech-enabled Pathshala, which will be hybrid models.
So if you see our track record in past 2 years, we have opened 170 centers. Our peak losses of offline are gone. Gone are those days where offline used to bleed. Already the centers which we have opened in FY23, FY24 are generating cash for us. So for further expansion from here, Vidyapeeth is self-sufficient, capitalized to expand further. Normally it takes 2.5 crore to open a center. We are opening 75 centers, sitting, that will require 150 crores of capital requirement, which is very less for a large company like us. We are sitting on a treasury of 5,500 crores. At the same time, online generates a lot of cash. So, and I already told you that Vidyapeeth, Pathshala put together will be EBITDA positive. The net offline learning segment of the company will become EBITDA positive by next year. For the ease of market, we will be reporting online revenues and offline revenues separately by next year. And Vidyapeeth versus Pathshala. Pathshala is a smaller business. Vidyapeeth is a larger business. So we will continue to focus on growing Vidyapeeth and making it more hybrid and more learner centric.
Okay, so that's with regards to where your platforms go, and 150 odd crores is what you're seeing that saying that you will need in terms of capex. But the margin impact is something that the street will be watching out for, because that has been a concern that the street has highlighted. So I think that's something which you should be ready with going ahead. But thank you so much, Prateek, for joining us on the show. Always a pleasure to speak to you in terms of what's in store for 2026, because here we're talking about a model which will be an offline plus online model, and the margin pressures that could be coming in when it comes to physical centers, whether your online model is able to really offset that impact from here on. A stellar listing, but whether that continues to see that up move is the key from here on.
I would say the big unknown for not just their business but for the entire edtech space is AI. Yeah, and very intelligent AI. I mean, we're all using it, right? Yeah. It's just natural. You have now a generation who first goes to AI rather than search.
Sorry, it's not this generation. Yeah. I do that the same. I'm the same boat.
Same, yeah.
Yeah.
All your generation.
No, but I think there's a generation that has not known the Google search. That their first sort of initiation into this whole space is, okay, you go and ask an intelligent computing technique on everything. And I think it's going to be used to help you with your schoolwork as well, or your education, or your classes, or your tests, or make this simple for me, or break it down and show it to me in a diagram. I'm not saying that, PhysicsWallah is not going to be on top of it, but that's going to be one big challenge.
That's a mother of a kid who's doing all of this.
Yeah. Well spotted.